A quiet mistake can cost far more than most people realize, especially when it follows you month after month for years without being noticed. If you were born before 1955, the amount deposited into your bank account from Social Security may not tell the whole story. Many people assume that once benefits begin, the payment is final and there is nothing left to review. That belief has caused countless retirees to miss opportunities they never knew existed. While it is true that many people receive the correct amount, others later discover that their benefit was affected by an incomplete earnings record, the age at which they claimed, a benefit they never realized they qualified for, or information that was never reviewed after retirement. Even a small difference in a monthly payment can add up to thousands of dollars over the course of retirement. The surprising part is that these situations are often found only after someone takes the time to look closely at how the benefit was calculated. The rules for Social Security are far more detailed than most people expect, and those born before 1955 fall under a unique set of retirement rules that younger generations do not share. That is why many people hear advice from friends or family that simply does not apply to their own situation. Small details, overlooked records, and decisions made years ago can still affect what arrives in your account today. In this video, we are going to break everything down in a clear and simple way. You will learn why birth year matters more than most retirees realize, how your claiming age can permanently influence your monthly payment, why your earnings history deserves another look, and which benefits many people overlook even after decades of retirement. We will also explain the common mistakes that can reduce benefits, the situations where corrections may be possible, and the simple checks that could help you confirm whether you are receiving every dollar you are entitled to under the current rules. None of this is based on rumors, viral posts, or promises of a secret government program. It is based on the actual way Social Security works and the rules that apply to different groups of retirees. One section near the end covers a review that many people never think to request, even though it could reveal information that has been sitting unnoticed for years. That single point has surprised many retirees because they assumed everything had already been checked automatically. By the time you finish watching, you will understand how benefits are calculated, why people born before 1955 should pay special attention to certain rules, and what practical steps you can take to make sure your own record is accurate. Knowledge like this is valuable because retirement income is too important to leave to assumptions. A few minutes spent understanding these rules today could help prevent years of missed opportunities tomorrow. Welcome to the channel, where we explain retirement, Social Security, and personal finance in a simple, honest, and easy-to-follow way so you can make informed decisions with confidence. If you enjoy clear explanations that help you protect your money and understand the benefits you have earned, subscribe to the channel and join our community. Now, let's get started. The first thing to understand is that your birth year plays a much bigger role in Social Security than many people realize. It is not just a number on your birth certificate. It helps determine the rules that apply to your retirement benefits, including the age at which you qualify for your full monthly payment. People born before 1955 are part of a generation that falls under a different set of retirement rules than younger workers. That means advice that works for someone born in the 1960s may not be accurate for someone born in the early 1950s or before. This is one reason so many people become confused when they compare benefits with friends or relatives. Two people can have similar careers, similar salaries, and even retire around the same time, yet receive different monthly payments simply because they were born in different years or claimed benefits at different ages. Full retirement age is one of the most important numbers in the entire Social Security system. It is the age at which you become eligible to receive your full retirement benefit without any permanent reduction based on early claiming. For someone born before 1955, that full retirement age is generally lower than it is for people born many years later. This gradual increase in retirement age was introduced over time, meaning different generations follow different rules. Many retirees never paid much attention to these details because they assumed retirement simply began at age 65 or 62. In reality, the exact age can make a significant difference in the amount received every month. Think of two workers who earned nearly identical incomes throughout their careers. One files for benefits as soon as he turns 62 because he wants the extra income right away. The other waits until reaching full retirement age before filing. Even though both paid into Social Security for many years, the second worker will usually receive a larger monthly benefit because he waited until the age required for his full payment. That difference does not disappear after a few years. It continues month after month for the rest of retirement. For many households, that can add up to tens of thousands of dollars over a lifetime. This is why understanding your own full retirement age is so important before making a decision. Many people made their choice years ago without fully understanding how permanent that decision would be. They simply needed income, wanted to stop working, or believed claiming early was the smartest financial move because nobody knew how long they would live. Those reasons were understandable, but they also meant many retirees never looked closely at the long-term effect on their monthly income. Retirement age is not just a date on the calendar. It is one of the biggest factors that shapes your financial future after leaving the workforce. But retirement age is only one piece of the puzzle. One of the biggest reasons people receive less Social Security than they expected begins with a decision made at age 62. For decades, many Americans viewed 62 as the natural time to claim benefits because it was the earliest age available for retirement payments. After working for 40 years or more, waiting another few years often felt unnecessary. Some people were tired of working. Others faced health concerns. Some wanted more time with family, while others simply believed they should start collecting benefits as soon as possible because they had paid into the system their entire lives. At first glance, that decision seemed reasonable. Money started arriving every month, providing welcome financial relief. What many people did not fully understand was that claiming benefits early usually comes with a permanent reduction in the monthly payment. This is not a temporary adjustment that disappears once you reach full retirement age. It remains in place for the rest of your retirement. In simple terms, Social Security pays a smaller monthly amount because benefits begin earlier and are expected to be paid over a longer period. On the other hand, someone who waits until full retirement age generally receives their full calculated benefit. If they continue delaying beyond that age, their monthly payment can increase even more through delayed retirement credits until age 70. That does not mean waiting is always the right decision for everyone. Health, employment, savings, family needs, and personal goals all matter. But many retirees were never given a clear explanation of how much claiming early could affect their lifetime income. Some only realized years later when comparing their benefits with friends who had waited longer. Others discovered that even a difference of a few $100s each month became a major issue as living costs increased over time. Inflation, medical expenses, housing costs, and everyday necessities can make every extra dollar important during retirement. Looking back, many people say they would have explored their options more carefully if they had understood the lasting financial impact. Instead, they focused on receiving money sooner without realizing that the monthly amount would remain lower for life. This is one of the most common reasons retirees feel their payment is smaller than expected, but that is not the only thing that affects your payment. Another important factor that many retirees overlook is the accuracy of their earnings record. Social Security calculates retirement benefits using the earnings reported throughout your working years. Every paycheck, every year of covered employment, and every contribution helps build the record used to determine your retirement benefit. If that record is complete and accurate, your benefit calculation is based on the correct information. But if earnings are missing, reported incorrectly, or connected to the wrong record, the calculation may not fully reflect what you actually earned. These situations are not common for everyone, but they do happen. An employer may have made a reporting mistake many years ago. A name change, incorrect Social Security number, payroll error, or missing wage report could result in earnings not appearing correctly. Sometimes people worked several jobs over the course of their careers and simply assumed every employer reported everything accurately. Years later, they discover that one period of employment does not appear the way it should. Even a single missing year can matter because Social Security uses your highest earning years when calculating retirement benefits. Higher earning years can replace lower ones, helping increase the average used in the formula. That is why reviewing your earnings history is an important step. Many retirees never look at their Social Security record after benefits begin because they believe everything has already been checked. In reality, reviewing your record allows you to confirm that your employment history, earnings, and personal information are accurate. If you notice missing or incorrect earnings, you may be able to request a correction if you have the necessary documentation. It is much easier to identify these issues when you know what to look for instead of assuming every record is perfect. Now let's talk about a benefit many retirees overlook. When most people think about Social Security, they immediately think about the retirement benefit earned from their own work history. What many do not realize is that, depending on their personal circumstances, they may qualify for another type of benefit. One example is a spousal benefit. In certain situations, a husband or wife may qualify for benefits based on their spouse's work record instead of their own. Another important category is survivor benefits, which may allow a surviving spouse to receive benefits after the death of their husband or wife if they meet the eligibility requirements. There are also rules that may allow some divorced spouses to qualify for benefits based on a former spouse's earnings record if specific conditions are met, including the length of the marriage and other eligibility requirements. Many retirees never explore these possibilities because they assume only their own work history matters. Others hear incomplete advice from friends who believe everyone qualifies automatically, which is not true. Eligibility depends on individual circumstances, including age, marital history, and other Social Security rules. Some people may qualify for a higher payment through one type of benefit, while others may not qualify at all. The important point is that retirement benefits are sometimes more complex than they first appear. Looking only at your own earnings record may not always provide the complete picture. Understanding every benefit you may qualify for helps ensure you are making informed decisions rather than relying on assumptions. There's another mistake that surprises even careful retirees. Many people believe their Social Security benefit is permanently locked the moment they start receiving payments. While the age at which you claim has a lasting effect, continuing to work can still influence your benefit in certain situations. If you claim benefits before reaching full retirement age and continue earning income above the annual earnings limit, part of your benefit may be temporarily withheld under Social Security rules. This often surprises retirees who expected to receive their full payment while continuing to work. Once full retirement age is reached, those earnings limits no longer apply in the same way, and benefits are adjusted according to the rules. Another important point is that higher earnings later in your career can sometimes improve your benefit calculation. Social Security generally uses your highest earning years when determining your retirement benefit. If a later year includes higher wages than one of your earlier lower earning years, that stronger year may replace the weaker one in the calculation. In simple terms, earning more later in life can sometimes increase your future monthly benefit. Many people assume working after retirement serves no purpose beyond earning extra income, but it can also affect the calculation itself in certain cases. That is why continuing to work should not automatically be dismissed as having no impact on your Social Security benefits. Now, here's something almost nobody checks. A surprising number of retirees receive their monthly payment for years without ever reviewing their Social Security statement again. They trust that everything is correct because the payments continue arriving on schedule. Yet this statement contains valuable information that many people never examine. It includes your earnings history, estimated benefits, and important personal details used in calculating your retirement payments. Even a small error can matter. A missing year of earnings, incorrect wage information, or inaccurate personal details could affect benefit calculations or create problems that remain unnoticed for years. Reviewing your statement allows you to compare your work history with your own records and identify anything that appears incorrect. Many retirees only discover missing information after speaking with a financial professional or contacting Social Security for another reason. By then, years may have passed. Taking a little time to review your statement periodically helps ensure that your information remains complete and accurate. It is one of the simplest steps you can take to protect your retirement income, yet many people never think to do it. Understanding today's Social Security system also requires recognizing that the rules have changed many times over the years. Retirement ages have gradually increased for younger generations. Some claiming strategies that were once available have been eliminated through changes in the law. Benefit calculations and eligibility rules have continued to evolve as new legislation has been introduced. Because of these changes, advice that worked perfectly 20 years ago may no longer apply today. Many retirees receive guidance from neighbors, relatives, or coworkers based on experiences from decades earlier. Although those stories may be sincere, the rules may have changed since then. This creates confusion because people naturally assume that if a strategy worked for someone else, it should work for them as well. In reality, your birth year, work history, marital status, and the current Social Security rules all influence your options. The most reliable decisions come from understanding the rules that apply today rather than relying on outdated information. So what should you do next? The best starting point is a careful review of your own Social Security information. Verify that your earnings record accurately reflects your years of work. Confirm your full retirement age so you understand the rules that apply to your birth year. Review whether you may qualify for spousal, survivor, or divorced spouse benefits if your circumstances meet the eligibility requirements. Check that your personal information is accurate and complete. If you notice information that appears incorrect or believe your record does not match your work history, contact the Social Security Administration to ask about the appropriate process for reviewing or correcting your record. It is important to remember that reviewing your information does not automatically mean your monthly payment will increase. Many people will find that everything has been calculated correctly. Even so, taking the time to verify your record provides peace of mind and helps ensure you are receiving every benefit you have earned under the rules currently in place. As we come to the end of today's video, let's return to the question that brought you here. Being born before 1955 does not automatically mean you're receiving the wrong Social Security amount. Many retirees are getting exactly what they are entitled to. But your birth year places you under a different set of retirement rules than younger generations, and that alone makes it worthwhile to take a closer look at your benefits. A surprising number of people spend years assuming everything is correct simply because the payments arrive on time. In reality, reviewing your earnings record, understanding your full retirement age, and checking whether you qualify for other types of benefits can give you confidence that your retirement income reflects your actual eligibility. Even if you discover that your benefit is completely accurate, knowing that for certain is far better than spending years wondering if you missed something important. Retirement is built on the decisions you make and the information you trust. A few minutes spent reviewing your Social Security record today could help you avoid costly misunderstandings tomorrow. The goal is not to create worry, but to replace uncertainty with knowledge. The more you understand how the system works, the better prepared you will be to protect the benefits you worked so hard to earn throughout your career. If you found this video helpful, take a moment to help someone else who may also benefit from this information. Share it with a friend, a family member, a neighbor, or anyone who was born before 1955 and is receiving or planning to receive Social Security. They may discover something that makes a real difference in their retirement planning. If you enjoy straightforward explanations without confusing financial jargon, this is the right place for you. We regularly share practical information about Social Security, retirement, Medicare, personal finance, and the important rule changes that could affect your future. Click the like button if you learned something new today, subscribe to the channel, and turn on notifications so you never miss an update that could help you make smarter financial decisions. Thank you for watching, thank you for being part of our community, and we'll see you in the next video.